Greetings, everybody. Welcome to today's edition of Liberty Call. As we kick off 2025, the financial world is already abuzz with some significant developments. Last year, we ended with the worst market stumble since 1952, sparking plenty of speculation about what this means for the year ahead. Tesla's developing delivery numbers have sent the stock market tumbling, while Chinese automaker BYD surged past Tesla as the global EV leader. Meanwhile, economic indicators are giving us mixed signals. Jobless claims hit an 8-month low, showcasing a resilient labor market, but mortgage rates are climbing, threatening affordability in the housing sector. In corporate news, Apple's aggressive holiday sale in China highlights its battle for market share, and analysts are cautiously optimistic, predicting a solid year for the markets. We shall see. We got a lot to unpack, so stay tuned, and I'll dive into today's top stories. All right, folks. Hope you're having a fantastical day out there in the interwebs. Hope you're enjoying my new intro, trying something a little bit different. And but before we jump into the markets and the news, I need you to do me a favor. Give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. You can see my main man, Jake, back here. He's excited about 2025. So let's get to it. All right. Well, there it is. All right. Let's get into the markets. All right. Dow Jones today was down 0.34%, 146 points, closed at 42,397. S&P 500 down 0.2%, 12 points, closed at 58,69. NASDAQ down 0.16%, 30 points, closed at 19,280. The VIX was up 3.23% today. It's at 1791. Canada up 0.69, Brazil down 0.01, and Mexico up 0.59%. Let's hop over the Atlantic, see our friends over in Europe. Germany was up 0.48, the UK up 1.07%, France up 0.18, the Netherlands up 0.97, Spain up 0.71, Italy up 0.55, Switzerland up a tenth, and Portugal up 0.55. Russian exchanges, both green. Looks like they haven't been open since the 30th when they were both up 3.4%. And the Asian markets, looks like some of them have been closed. We'll start out with the Nikkei. When it closed on the 30th, was down 0.96. Australia was open today, up 0.52. New Zealand last closed on the 1st. It was down 0.12. In China, the Shanghai was down 2.66. The Shenzhen Component down 3.14. China A50 down 2.71. DJ Shanghai down 2.73. Hang Seng down 2.18. And the Taiwan weighted down 0.88%. All right. So those are our markets for today. Feeling good out there, folks? All righty. Well, let's hop into our market recap. Stocks falter and dollar hits a 2-year high. So let's see what's going on in the markets today. Global stocks declined on Thursday, marking a subdued start to the new year as early gains faded. The S&P 500 was on track for its 5th consecutive daily loss, its longest streak since April. U.S. Labor Department data revealed that initial jobless claims dropped to an 8-month low of 211,000 last week, reinforcing the labor market's resilience and fueling consumer spending, a key economic stabilizer. Wall Street losses were led by the consumer discretionary sector, with Tesla falling 6% after reporting its first annual decline in deliveries. European stocks, however, were closed higher, driven by gains in energy stocks. The MSCI Global Stock Index fell 0.48, while Europe's Stock 600 gained 0.6. The dollar surged to a 2-year high, with the dollar index climbing 0.77% to 109.37. Analysts attribute the dollar strength to expectations of continued robust U.S. economic growth, slower Fed rate cuts, and strong capital flows. The euro fell 1.01% to 1.025. And the yen weakened 0.44% to 157.56 per dollar. Well, here would be my guesstimate on what I would think is the main reason why the dollar strengthening. It's because the other currencies suck. That's right. I mean, I hate to put it in such vulgar terms, but that's the reality, is that the other major currencies around the world have far bigger problems than the US dollar. And we know the dollar has a lot of problems, simply, just looking at the devaluation of it over the last, 4 years, 10 years, 20 years, 50 years. So, so I think people are going to the dollar, not necessarily that the dollar's good. It's just that the others are worse. So that's my hypothesis. All right, jumping back in, recent market volatility reflects concerns over the Federal Reserve's cautious economic forecast and potential inflationary impacts of President-elect Donald Trump's policies. Yes, because the Democrats don't ever do anything to create inflation, such as tariffs. Rising treasury yields with the 10-year note above 4.5% have added pressure on equities. Oil prices rose on optimism surrounding China's economy, with U.S. crude climbing 1.94% to $73.10 per barrel, and Brent increasing 1.67% to $75.88 a barrel, fueled by President Xi Jinping's commitment to economic growth. While this year begins with uncertainty, market dynamics are heavily influenced by global economic factors and policy shifts under the incoming administration. All right, so that's day one into, I guess it's tax year 2025. Fiscal year began in October. All right, well, let's get on to our next article from Zero Hedge. What is the biggest risk factor for 2025? And 13 other highlights from Deutsche Bank's 2025 market survey. All right, the Deutsche Bank 2025 global financial market survey conducted between December 10th and 13th of last year with 471 global participants revealed key insights into economic and market expectations. And here are a few of the highlights. U.S. versus Europe growth. Only 2% expect U.S. growth below 1% in 2025, with an average projection of 2.5%. Europe's growth forecast is weaker, averaging 1%, with no respondents predicting growth above 2.5%. Major risks. A global trade war is seen as the biggest risk for 2025, followed by concerns over a tech stock collapse, inflation, and bond yields. Trump's tariffs. Investors expect moderate tariff action from President Trump, with only 6.4% predicting extreme measures. German debt reform. A majority, 90%, foresee reforms to Germany's debt brake. Only 12% though only 12% anticipate significant changes. Yeah, typical. Tech bubble sentiment. Perceptions of a U.S. tech bubble have declined slightly since 2021, though risks remain high, particularly for Bitcoin, viewed as the most bubble-prone asset. Market expectations. The S&P 500 is projected to rise 5.2% in 2025, with a 35% anticipating gains between 5 and 10%. Nvidia and Bitcoin are seen as more likely to have than double in value. Treasury yields. The 10-year U.S. 10-year yields are expected to average 4.2% by year end of 2025, with limited expectations for significant increases. Diverging inflation. U.S. inflation expectations are rising, while European forecasts have been falling below 2% for the first time since late 2021. Cultural insight. Home Alone topped as the favorite Christmas movie, offering a lighthearted conclusion to the survey. The findings indicate cautious optimism for U.S. markets, tempered by global risks, diverging economic trajectories, and persistent inflationary concerns. Well, inflation is definitely a concern, since we haven't had any deflation towards back where we were 5 years ago when all this nonsense started. All right, got one last article here to cover today, also from Zero Hedge, why a U.S. Bitcoin strategic reserve is critical to fending off China. This was written by Zach Townsend via Coindesk.com. So let's see what Zach has to say about why we should do this. All right. The article highlights the growing use of finance as a strategic weapon in global power dynamics, particularly focusing on China's efforts to challenge the dominance of the U.S. dollar as the global reserve currency. The U.S. faces increasing threats from authoritarian regimes like China, Russia, and Iran, which are building parallel financial systems to bypass Western economic influence. If I could pause here. I find it funny that they call them authoritarian regimes because, the U.S. is so, democratic and does everything fairly, and that they're upset about bypassing the dollar system. Well, we just have seen what has happened with Russia and the whole Russia-Ukraine thing, and how Russia's assets have been seized by Western banks and not given back. So, regardless of your opinion of Russia-Ukraine, and I have my own opinions, which probably differ from most out there, but it's not right to take other people's stuff. And the fact that, the BRIC countries have decided, well, if we want to go another direction, this is just a way of them protecting themselves. And we would do the same thing if the roles were reversed. So just remember that. All right. Where were we? These nations are leveraging financial technology, fintech, and cryptocurrency to extend their power and surveillance globally. China's fintech giants such as Alipay and WeChat Pay are expanding their influence in markets like Japan, providing China with unprecedented economic leverage. This raises concerns about economic disruptions during geopolitical tensions, such as potential conflicts over Taiwan. To counter these threats, the U.S. must adapt by promoting its fintech and integrating cryptocurrency, particularly Bitcoin, into its financial strategy. Bitcoin, often termed digital gold, is scarce, globally adopted, and offers a hedge against inflation, as long as the electricity keeps working. The U.S., as the largest nation state, it's not a nation, it's a federal republic. Each state is a nation. Let's see here. Holder of Bitcoin could solidify its economic future by including it as a reserve asset. Critics point to Bitcoin's volatility, but this is expected to stabilize as adoption increases. The article underscores the importance of exporting U.S. Financial systems and enabling decentralized financial technologies to empower citizens in adversarial states. This approach could undermine authoritarian regimes' control over their economies while enhancing U.S. financial power. Because anytime the U.S. has power, that is always a good thing, especially if you're a nation of brown people over in a desert with oil underneath your feet. Let's see here. We already covered that. Finishing up, in this multi-front financial war, the U.S. must act decisively to maintain its global influence by embracing innovation in its digital currencies and fintech to secure economic stability and leadership in a rapidly changing global landscape. And also, if the federal government stopped being jerks to everyone around the world, we probably have a lot less problems. China probably wouldn't be a problem. I mean, I look back over history over my 50 years of life, and I have to wonder how much of a problem were the Ruskies and and China of late. I think we create most of these problems just to have a paper tiger to fund the war machine and keep Boeing and Lockheed and Raytheon and all those government contractors nice and fat. So. All right. Well, that's everything I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a call. I'd be happy to help you get on track, especially it's New Year's. You're not going to join that gym or even bother going to it. So give me a call. For the way less money than a gym membership, you can get your financial crap back in order. So, all right. Well, hope everyone has a wonderful evening, and I'll talk to everyone next time. Adios.